The IRS is currently holding refund money that belongs to American seniors. Not because of an audit, not because of a dispute, not because of any error on your part, but because the form required to claim it was never filed. The average unclaimed amount among seniors who qualify and do not claim is $4,873. This is not an estimate. This is money the federal government has already acknowledged you are owed. The IRS does not send you a check automatically. The IRS does not call. The IRS does not send a letter saying you left money on the table. The system waits, and if you do not file the right form within the 3-year window, that money reverts permanently. No extension, no appeal, no recovery. Gone. Today, I am making sure that does not happen to you.
Before we get into it, if you are not subscribed to Benefits USA, do that right now and turn on the bell. The IRS does not send a personal explanation when you qualify for money you never claimed. What this channel does is break down exactly which forms put real money back in your pocket before the deadline closes. Hit subscribe and let us get into it. Before I go further, I need to address two groups who are already thinking this does not apply to them, and both are wrong. The first group is the senior who already files every year with a preparer or software and assumes if a refund were available, it would have been caught automatically. That confidence is understandable, but frequently wrong. Preparers in high-volume settings process hundreds of returns and apply standard forms. The specific credits tied to Social Security income, pension income, and the new senior deduction structure require updated knowledge most preparers have not caught up on yet.
The second group is the senior who does not file at all because their income is primarily Social Security, and they believe they are below the filing threshold. This group loses the most money of anyone watching. Refundable credits do not require you to owe any tax to receive a check. You can owe zero federal income tax and still get money back if you file the right form. Nobody watching this should finish thinking it does not apply to them. Here is the mechanism, and understanding it will make you angry in a productive way.
The IRS does not proactively calculate what you would be owed if you had filed differently or filed at all. Its job is to process refunds that are claimed. The operative word is claimed. Money flows out only when a form comes in. If no form comes in, the money stays. And here is what makes 2025 and 2026 the critical years. The 3-year window for amending a return to claim a refund is a hard deadline. A senior who qualified for a credit in tax year 2022 and did not claim it has until the 2025 filing deadline to recover it. After that, the window closes permanently. 3 years sounds long. It is not, especially if you were not actively checking for missed opportunities.
The first source of unclaimed money is the Earned Income Tax Credit, and the misconception about it is about 20 years out of date. Most people think EITC is only for working families with children. That changed starting with the 2021 tax year. Congress eliminated the upper age limit entirely for seniors. A senior with any earned income, part-time work, consulting, self-employment of any amount, may qualify regardless of age. Here are the numbers for tax year 2025. The maximum EITC for a senior with no qualifying children is $632. With one qualifying child, including an adult child with a disability, the credit can reach $4,213. With 2 qualifying children, $6,960.
The income limits. Single filers need earned income and adjusted gross income below $18,591 with no children. With one child, the limit rises to $49,084. Social Security does not count as earned income for this credit, but it does not disqualify you either. If you receive Social Security and also earn $8,000 from part-time work, you qualify for EITC on that earned portion. If you babysit grandchildren for pay, do handyman work, sell items online, or have any self-employment income, even small amounts, you likely qualify.
There is one catch.
Investment income above $11,600 disqualifies you regardless of earned income. One action right now. Go to irs.gov, search EITC Assistant, and answer 5 questions. It takes less than 3 minutes and gives you a definitive answer. The second source is the credit for the elderly or disabled on Schedule R, one of the least claimed credits in the entire tax code. Not because few seniors qualify, but because few preparers ever check Schedule R as part of standard return preparation. It is available if you are 65 or older by the end of the tax year. The credit is 15% of an initial amount, $5,000 for single filers, $7,500 for married couples, reduced by non-taxable Social Security, non-taxable pension income, and half of adjusted gross income above certain thresholds. For most seniors, this calculation has historically come out to 0. But here is what almost nobody knows. The new senior bonus deduction reduces your AGI. Reduced AGI reduces the phase-out. For seniors in the $20,000 to $35,000 income range, 2025 is the first year this credit may produce a non-zero result after years of calculating to 0. One action right now. If you use tax software, search for Schedule R or Credit for Elderly or Disabled and manually navigate to that section. If you use a preparer, ask specifically whether Schedule R was run with the 2025 senior bonus deduction applied to your AGI. The third opportunity is the amended return window, and this is where the clock matters most. Most seniors believe once a return is filed and accepted, that year is closed permanently. It is not. The IRS allows you to file an amended return using Form 1040-X for up to 3 years after the original filing deadline. Form 1040-X is a straightforward 2-page form. It shows your original figures, your corrected figures, and the difference, which becomes a refund owed to you. Electronic amendments typically process in 8 to 12 weeks. You can track status on irs.gov using the Where's My Amended Return tool. Here is the deadline that matters right now. If you had qualifying earned income in 2022 and did not claim EITC, the 3-year window for amending that 2022 return closes with the 2025 filing deadline. If that is you, act before that deadline. One action right now. Pull your returns for 2022, 2023, and 2024. Check whether Schedule EIC and Schedule R appear. If either is missing and you believe you qualified, use IRS free file fillable forms or a free VITA or TCE site to run the calculation. If it shows a missed credit, file Form 1040-X before the deadline. The fourth thing to know is that claiming this money costs you nothing. VITA, Volunteer Income Tax Assistance, is available to taxpayers generally below $67,000 in income. It is completely free, including amended returns, and sites are located at libraries, community centers, and churches nationwide. TCE, Tax Counseling for the Elderly, is available to seniors 60 and older with no income limit. The largest provider is AARP TaxAid, which operates thousands of sites and does not require AARP membership. Both programs can prepare Form 1040-X amended returns at no charge. A senior who uses VITA or TCE to file an amended return claiming $4,873 in missed credits pays nothing for the preparation and receives the full amount. One action right now. Go to irs.gov and search VITA Locator, or search AARP TaxAid Site Locator. Enter your zip code, call to confirm they handle amended returns, and schedule an appointment. Bring your original returns for the years you want to amend, along with your Social Security and income statements. Here is everything you need to do this week. Check the EITC Assistant tool on irs.gov. 3 minutes, definitive answer. If you use tax software or a preparer, confirm Schedule R was run with the 2025 senior bonus deduction applied. Pull your 2022, 2023, and 2024 returns and check for missing Schedule EIC and Schedule R. The 2022 window closes with the 2025 filing deadline. And remember,
Vita and TCE can prepare all of this completely free. The money exists. The law says it is yours. The only thing standing between you and it is knowing which form to file and filing it before the window closes. Subscribe, turn on the bell, and send this to one senior in your life. A parent, a sibling, a neighbor. It does not matter whether they file every year with a professional or have not filed in years, thinking they owed nothing. Both of those people are in this video, and the 3-year window is closing right now. I will see you in the next one.